Hi, it's Lee, and welcome to the Tesla Economist. Alright, I've been doing a lot of thinking lately and trying to gather my thoughts on Tesla. It's not been easy, but I think I'm gaining clarity. Tesla was much more than just an investment to me. It was a future with clean energy, decentralized wealth, and higher living standards for all. I found it very exciting and couldn't miss a moment of it. I thought I'd identified the core element of Tesla's growth, cell and battery production, and decided to learn and research as much about batteries as I could, down to the electron. I know Tesla's financial statements inside and out, and the company was perfectly geared for growth, with lower cost production and much more operating leverage to come. Doing just 1.5 million cars a year, there was obviously still ample more room for growth compared to other automakers at those price points. Not only that, the actual industry of electric cars was growing at a huge rate too, and looking to become mainstream rather than just a niche. And Teslas are superior over all other electric cars. They have the best technology, get the best performance, and the longest ranges. Tesla are also able to produce electric cars at the lowest cost, like for like. Tesla are also able to produce them at a much higher pace than any of the competitors, with insane amounts of production coming out of their factories. This is no doubt impressive. Then the fact the waiting list for Teslas went through the roof, and Tesla started to have to raise all their prices across the board in order to manage the demand they were facing. This in turn increased margins and profit substantially. Then, in order to increase supply to meet this additional demand and reduce costs and prices, Tesla discovered revolutionary new production techniques and new cell design, which means Tesla can make more of their cars at lower cost. Tesla had the demand, and they had a path to get to the supply. But something changed my view on all this. I'm not sure if it was one thing in particular or several at once. There were obviously demand concerns in China, but it was also hard to know. Tesla had record sales in November. Tesla reduced their prices in China, but they were still higher than they'd been last year. And Tesla had increased production by around 30%, likely reducing some costs and needing to increase demand due to more supply. Also, in December, offering discounts to consumers in the US made sense, as it was rational for them to wait until January to buy one when they get this tax credit. But then all of a sudden, the export markets no longer had waiting lists that were months out. Instead, it was all next month. I'm continually monitoring demand, and for it all to go this fast didn't sit right with me. I thought demand for Teslas might have actually dropped. There was also inventory in a lot of these markets too. Then recently seeing deliveries so much lower than production felt like another sign of demand dropping. I was telling everyone that Teslas were going to have to drop prices as a result. Then they did drop prices in China significantly, which to me is just further evidence that demand is down. Tesla have now dropped their margins in China to around 15%. Now that's still going to be about $5 billion gross profit if they sell just about every car they make there. My biggest concern really is the two new factories. They would increase Model Y output significantly. And when you add more supply, prices have to come down if you no longer have a waiting list. Prices are likely to come down anyway as demand is down generally. Why is aggregate demand down for autos? Because interest rates have gotten so much higher. In fact, the saving in tax credits in the US is just about the same as how much more you have to pay on interest. Also, this is demand when there is still a reasonable economy. I don't think we've seen the start of a real recession yet. I think we will know when it hits. The demand we were seeing before was in a boom. Therefore, the auto industry is losing demand, and yes, it would appear that despite the EV industry growing, it may still be affected too. Well, clearly, if Tesla's demand is down. The thing is, Tesla just increased production 30% in Shanghai. That's a lot more cars to try and sell. They're also increasing production at the two new factories. The issue with the new factories is that they cost a lot to run, and may be breaking even now, but if we see a serious price drop on the Model Y, then this might change, and then instead they might be producing losses again. Then the thought of ramping them up to make more vehicles would only mean that we have to have lower prices again to sell the additional units. Remember, these factories are still only 1/4 of their Model Y capacity currently. And that wasn't the only thing I wasn't happy about. Seeing the current 4680 run rate, I know all about S-curve and exponential growth, and where the cell production would be if they hit 30% growth month over month, and it looks great. But we were promised much more, many times before. Assuming there is enough demand for them, of course. I mean, remember, we're talking as much production for 2 million Model Ys a year. perhaps there isn't enough demand for that many Model Ys, or at least not in a recession. It's just one model in what could be viewed as a niche segment of autos, and it's still going to be more expensive than a Toyota RAV4, which doesn't even sell close to 2 million in a good year. So if Tesla hit the 4680 production targets, then they can potentially ramp up those factories, which is also going very slowly. I think we have to acknowledge that, especially when we compare it to the Shanghai Model Y factory, which was at twice the run rate in half the time. My theory is there just aren't enough cells to make them any faster. But then even if they hit capacity with the 4680s, then they'd have to cut the cost of the car quite a lot in order to get the demand. Although the 4680s would hopefully save some cost. But it still might be tough selling that many of one model, and I would say just about impossible in a bad recession. Of course, all this additional Model Y supply is also going to mean Tesla are going to have to reduce prices at the profitable Fremont facility. But even so, Fremont should be able to do around $5 billion in gross profit as well. These are not bad numbers. That would be around $10 billion gross profit from Fremont and Shanghai combined after the price cuts. The overall financials would therefore end up coming down to what these new two factories end up doing. If they can ramp production, then it reduces the ASPs of all factories. But economies of scale kick in, like OPEX per vehicle reduces. Do you see the dilemma here? Tesla want to just about double the supply of the Model Y by ramping their new factories. There are already demand issues. Doubling supply would make this worse. I think the only way they can double supply is by going with 4680 cells, unless they decided to use LFP, but they already make enough LFP Model Ys in Shanghai. Of course, the long-range vehicles are more expensive though, so they have less demand. But actually, Germany is aggressively pricing the long range only €3,000 more than the rear-wheel drive version. However, last I checked, there were a lot of performance and long-range models in the German inventory. On top of ramping supply this much, when demand is already dropping, it makes it tough. And if we go into a real recession, then it becomes a lot tougher. Now, I think that the new factories are running on perhaps the available supply Tesla actually have for 2170 cells. They may be depleting a stockpile as well, but it's possible this might be the actual run rate of cells they have available, which will make it very difficult to ramp up any further without 4680 cells. Therefore, it's possible these new factories can't actually ramp any further, and if Tesla has to drop prices, then they will actually be back at a loss due to the loss in margin. I know Elon said he just wants to get the supply out there and take the market share, but there is so much supply, Tesla would have to crush their prices to unload that many cars, which might mean to a level that they actually make a loss, which is what Elon said could happen in a worst case scenario. I think it would be more profitable to shut down the new factories and stop building Model Ys there. It would mean that they don't need to lower prices so much. In Fremont will be very profitable, especially with the tax credit and much less supply. Shanghai should be able to make a profit too. If Tesla cut OPEX a lot, then they could have a gross profit of $10 billion and an operating profit still above $5 billion. Quite possibly close to $10 billion if they do well on subsidies, tax credits, and of course energy is a wild card. In other words, I do see a good chance that Tesla can make over $10 billion in earnings this year, possibly more if we don't go into an extreme recession. The only way I think Tesla could actually lose money would be from those new factories. However, if in a recession, what P ratio might you give a growth company that isn't showing any growth, especially if the market is starting to think it looks like just another car company? The other issue is that what about when the economy recovers to the normal market activities, when rates are a bit lower and consumer confidence returns? Is there really going to be enough demand for 2 million people to want just one model? Before the craziness, a Model Y only had 4 to 6 weeks waiting list in the US when the price was still only $50,000. I know this was last year, and perhaps a lot of the world has decided EVs are the future sense. But Tesla are trying to sell 10 times more of them now, and there were fewer alternatives back then. So to summarize, the future of the growth we expect relies on the 4680, which in my opinion isn't close to being proven. The other aspect is FSD, of course, which I tend to always steer clear of in valuations. Then, even if Tesla can generate enough supply, will there really be the demand? And then without FSD and no more exponential growth and massive margins, what price will the market give Tesla? I've been analysing this company like crazy for years. It was looking amazing, and it may sound like I'm changing my mind here, but I've been looking out for everyone if I see any red flags. The two fundamentals I have based a lot of the future on are demand and 4680 sales. I simply feel it's right to address my concerns to you. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.